Hey, this is Evan Hutcheson again, and today I'm going to talk about investing in gold and one of the most tax-efficient ways to do so. There are a lot of ways to invest in gold, and you can go into Google and Google different things. Here's Forbes talking about 4 ways to invest in gold. There's countless sites, just like there is for everything else. Gold has it's kind of lured investors for a long time, probably for centuries, for its rarity and its beauty, which explains why nearly half of gold demand worldwide is by the jewelry industry. Another 32% of gold is for gold bars and coins, otherwise known as gold bullion. Investment in gold bullion in 2004 would have provided a pre-tax annualized return of over 12% over the ensuing 10 years. So it's usually a pretty good investment, but the return is not without its risks. Over the past several years, gold prices have dropped dramatically. In 2012, investments in gold would have returned an annualized pre-tax loss of over 14%. So it can hit pretty hard at times. For tax purposes, physical gold investments are classified as collectibles, which is a little bit worse of a classification than capital gains. So gains on collectibles held over 1 year are taxed. Held for 1 year or less are taxed as ordinary income. Now these long-term gains held for more than a year, normal capital assets would get the preferential rate for the long-term capital gain. But since gold is a collectible, it's going to be taxed at the maximum collectible rate of 28%, which is a lot higher than the 15% long-term capital gain rate that applies to capital assets. So when you're looking at what I said earlier, that it's had an annualized return of over 12%, that declines to about 10% on an after-tax basis. So if the gold had actually been classified as a capital asset, then the after-tax return would have been nearly 11%. So it dropped a whole percentage just because of the collectibles tax rate. And to make matters worse, losses on collectibles, so if you lost on the gold, they are used to reduce capital gains first of all. So you're using your loss against a more a lower tax rate, which is obviously not what you want to do, because when you're incurring a loss, you want to use the highest tax rate possible. So what a lot of people have done is in order to maximize after-tax returns, a really efficient vehicle for investments becomes very critical. And what a lot of people have done is to put the gold into an IRA. This helps out a lot with your, when you do the after-tax return on gold. And it's not just with gold. You can do it with other metals, silver, platinum, pretty much any type of rare metal. This is fairly new. I mean, the history of investing in gold is there's a lot of different instruments you can use before you were able to use an IRA. You can use gold coins. You can use closed-end funds, mutual funds, and so forth. Back when FDR was president, he made it illegal to own more than a small amount of gold at a time, because he wanted to avoid these gold hoarders, who he thought and other people thought were stifling the economic growth. So this restriction lasted for more than 40 years. It was finally lifted in 1975. And now there's, like I said, a whole lot of different ways you can invest in gold. IRA is pretty much the newest way, and when the IRAs were first allowed in 1974, the investments in collectibles were prohibited. Um, the intent of that the intent of the restriction was to reduce the risk, the speculative risk taking in retirement savings accounts. An exception to this rule was introduced in '86 that allowed U.S. gold and silver coin investments. In '98, the exception was expanded to include bullion that is over 99.5% pure. And in '07, the IRS ruled that gold ETFs were not collectibles for IRA investment purposes, which was a huge advancement, a critical step in making this more beneficial. And it's just like a normal IRA investment. So when the gains from the gold sold within an IRA are not going to be taxed until the cash is actually distributed to the taxpayer, and it's at the taxpayer's marginal tax rate. So it's very different than most other investments. It's an IRA, it's an individual retirement account, but you're able to use gold for its most use it in a very beneficial way, which is not what's been going on in the past. So it's a big change, a big benefit now, and a lot of people are doing it. So I hope that clears. I hope you can understand a little bit of what this all means, and maybe take a look, if you are interested in investing in gold, maybe take a look in the direction of either using your IRA or opening up an IRA with gold being one of the investments. So hope this helps. Talk to you soon.